Hey guys, this is Tony Benson with Wealth Builders HQ and creator of Patterns in Flash. We're going to do the review of the pattern of the week from last week and also the ones that are still active. There are a couple that I left on there that will be kicked out next week, but just wanted to go over these very quickly. Before we do that, got to get the disclaimer out there. We're not registered broker-dealers, investment advisors. I will not give you any recommendations or advice. Everything we do here is purely for educational purposes. If we do mention a trade or say anything about any kind of trade, just assume that it is a paper trade or a practice trade. For regulatory reasons, we do not discuss funded trading. So let's hop right into it. The three that we looked at last week were Alcoa, KE Holdings, BEKE, I call it BEKE, and then Range Resources, RRC. So we hop right into the charts, and there is Alcoa. Beautiful head and shoulders. It is even playing out even better right now. It popped back up and tested that 52 level, which I love, and it's dropped back from there. Let me try to get it as big as possible. So we will see what it does in the next few days, but ultimately what I'd like to see happen is have it come back down to this 46, dig in a little bit, kind of like it did here, and test it a few times, and then break it. Because if it just drops here and falls right through it, stocks don't typically just fall like a rock. They do, but probability-wise, from an odds perspective, they don't do it very often. So it could, and that's one of the reasons that I will sometimes take a small position. If this did start to just fall like a rock, I'll take a small position, but I won't take a big one, just because probability-wise, they don't do it. So it's aggressive to get in if it's just falling like a rock. So what I do to mitigate that aggressiveness, because I do trade very aggressively, but I will tamp down that aggressiveness by trading a smaller position. Hopefully it makes sense. So I like to get in at the really aggressive spot when stocks are moving or getting ready to move, when it looks like they're getting ready to move. But if there's more risk than normal, I just pare back the position. So instead of doing 10 contracts or 1,000 shares, whatever your numbers are, I might do 2 contracts or 3 or even 1. So just a thought. That's just the way I trade. I get in the aggressive spot with a little position, and I'll add to it as it moves in my favor. So Alcoa is still looking beautiful. BlackBerry, still kind of keeping an eye on. This is where we highlighted it, looking for it to possibly break out to the upside. It has not yet. I don't know that it will, but I'll keep an eye on this for another week or so and see what happens. Just set some alerts up here, and if it hits it, then we'll go back and look at it and see what happens. That's typically what I'll do is if something's in a range to possibly break one way or the other, I'll just throw some alerts out there. And if it hits it, then I'll go back and revisit it. So BEKE, this is another one. Probably half of these are in this position where it popped back up on earnings, but it's just kind of dancing around now. It's a little too gappy. You can see in the last couple months, it's gotten really gappy from day to day. And the last week and a half has been even worse. And a lot of that's just news driven, right? So we'll see how this one behaves. If it holds this 22 level and uses it as support and kind of dances on there, then I might put a hook up there at 23.30. I'll throw a contingent order out, says, okay, if it moves bullish, then I want to get in because that's over $6 of potential on a $22 stock. That's a 25-30% move. That's a nice rate of return if you get in. But right now it's kind of in a holding pattern. I'm not excited about it until it gives me some other clue, some indication that it may have another run to the upside, which is the hard part of trading, right? Being patient. BKR, this one we highlighted back here. You can see the vertical line. This is still not only still on the radar, but it's actually triggered a position at 24.57 a couple of times actually in the last week and a half, 2 weeks. So if you've gotten on that, if you've gotten into a position on this, then don't know what's happening tomorrow, but we'll see if it continues to fall. You can see down at the volume, just a little volume analysis. The volume has been light on the green bars, not real heavy on the red bars, but yesterday it did accelerate a tiny bit. So had some accelerated volume here over the last couple months as we were peaking out here about that 25, 26 level. So BKR is looking good. And this is another one that we're looking at almost $5 of potential on a $25 stock. That's 20%. So if this thing drops back down to 20, where the target's at, then if you're in this position, the rate of return should be spectacular. If you're not in it, if you missed it and it's too late and it's moving down tomorrow, then maybe paper trade it and see what happens. So we've got a little kind of a falling through methods there, but it's not very textbook. So anyway, moving on to Colgate. This will come off the list for certain next week. This is one, you see that vertical line is where I highlighted it. That was the day that we looked at the double bottom. It broke out at the midpoint right here. It did a perfect little roll reversal. It pulled back. It went a little tiny bit below the midpoint, but that's not unusual. And then it rallied up here. So realistically, this was the day that I highlighted it, so you wouldn't have seen it till here. and then it drops back down, and then you have an alert sitting up here somewhere. It hits it, and then you throw an order out at 76.57, and a week later you've hit the target at 78.50. That's only $2 on a $76 stock. This one you're not probably going to hit a massive grand slam with. If you would have pulled the trigger on this trade, you're probably making somewhere between 20 and 50%, depending on which option you buy. And you can see it hit the target, hit it twice, and then it fell from there. So that will come off the radar last week. I just wanted to show this is what happens. This is where the patterns of the week come out, right? So you're seeing it now. If you missed it, you missed it, right? Which is normal. Don't get upset. It's not unusual to miss trades. It happens all the time. But the reality is that if you were a subscriber to Patterns of the Flash, you'd have had this trade and could have taken it, right? And I hate saying could have, because I hate the woulda, shoulda, coulda syndrome. I have to fight it every day myself. But the reality is that if you don't see that, aren't aware of it, you miss it, right? And I've like I said, I miss trades all the time. So CMP is still on the radar a little bit. Not terribly excited about it anymore. Had kind of a descending triangle type of pattern, looking for something bearish. Little hangman today, but not a lot of volume. I'm not that excited. This will probably come off the list next week. Coupang's another one that there's the vertical line. Another one that if you'd have gotten bullish, if you were in Patterns in the Flash, you get in right here. And it did take a little while, finally dropped off. You should have had a stop in here somewhere and gotten stopped out one of these days. You would have been in this 2 or 3 weeks. But earnings was coming too, so you got to get out before earnings. So you would have yielded a small profit on this. It didn't hit the target like Colgate did, but got about halfway there. So you should have stopped out at some point with a small profit at least. Disney is one that's been on the radar. This will come off for certain next week. Earnings obviously gapped it. This is one that had a big, giant head and shoulders that was taking place. And holding over earnings can be crazy. If you're really crazy, I'm very aggressive. I'm not crazy. Occasionally I get a little bit crazy, but very rarely. So holding over earnings would have been a little bit crazy, but you would have made a killing if you had puts, right? But there's the woulda again. So if this thing rallies back up and closes this window and fills that gap, then maybe we'll see what happens when that happens. But if it does run back to that level, it's going to take probably a week or two. So most likely Disney's coming off the list. Kraft Heinz, this is one highlighted right here. The next day it triggered the entry point. The next day it stopped out. This is one I actually took the trade on, and I didn't take a super huge position because it wasn't excitable to me. Not a spectacular pattern. It was decent. I think I lost $120 or something like that. Not a big deal. I just did a handful of contracts. It wasn't much, but it really wasn't that big of a deal. So this one did not work out. So as you can see, I mean, we got Colgate did work out beautifully, and Kraft Heinz did not. So we never hit all of them, right? It's never 100%. In fact, if you're doing it right, you should be under 50% and still profitable. And in my Pattern of the Week video, I just went into that risk reward again. If you haven't been in there, there's a risk reward video in there that will blow your mind. So you can get a 2-week trial on it, go test drive it, and go take the quizzes. That'll give you an idea of where you're at knowledge-wise and technical analysis-wise, where your skill level at, where your understanding is. Take the quizzes. There's 4 of them in there. Then go watch the bonus videos, the risk reward specifically. So Morgan Stanley, we've got a double, triple, quadruple top, whatever you want to call it. But it is showing some bearish signs. You can see the level of volume on the downward moves over the last couple months has been increasing. So I'm looking at this. This is kind of a midpoint. It's not a beautiful ideal pattern, but looking at this 96.60 level as a midpoint. So if it cracks that level, then I'll be looking at a downward move for Morgan Stanley. Petrobras will come off next week. This is another one. We were looking at an ascending triangle. It's still technically inside the pattern, but it'd have to get way up here to $12, and that's going to take several weeks, I think, if it was going to. So unless something changes with this in the next few days, it's going to come off the list as well. This is the pattern of the week that was last week, I believe on the 10th. Yes, it was. So there's where I highlighted it as the pattern of the week. Let me get to lines so you can see. There's a head and shoulders. Beautiful looking head and shoulders, right? And if you're not familiar with range resources, this is another one I did. Just like Peloton. We had Peloton do similar thing where there's range resources back. It was somewhere in here, somewhere in July. I think it was July 17th, if I remember right. Actually, I had one of my students last night in our monthly class, or bi-weekly class, every two times a month. I do a live class twice a month for every student that's in Patterns in a Flash. Twice a month we get together for an hour, 5 o'clock, usually every other Wednesday. But this one I looked at and highlighted, maybe it was 728. He gave me the date on it. I couldn't remember. But there's a head and shoulders right there. And it didn't play out perfectly because the measured move would have been, maybe it did. I'm trying to remember. When you look at as many patterns as I do, you kind of forget. So there's the expected move. Yeah, it didn't go all the way to the target, but it got pretty close. It got about 70% of the way there. So this is another head and shoulders that range resources played out, and it did it in 5 days, and it got most of the way there. You most likely would have stopped out if you're pulling your stop down. You would have stopped out somewhere in here. So you would have had a decent little profit. But here we are again, another head and shoulders for range resources, and it's already broken, actually. So we'll see what happens tomorrow and the next day. Not a big break, not a big chunk of volume on the break, which isn't that big of a deal. On a bullish, on a bearish head and shoulders, a reversal from the top. The inverted head and shoulders, you want to see volume on the upside when it breaks to the upside. It's more important on that. So this one, we'll see what happens. I put the target a little bit shy of, it could easily come down to 1830, but I put it a little bit short because, like last time, it didn't quite get all the way there. So I'd rather go a little bit shorter on it. There's a little bit of resistance right here. So I threw it to 2021. And if you don't know me, what I do a lot of times is scale out. So if this thing triggers, I didn't get it yesterday. I didn't get it today. We'll see what happens tomorrow. So I kind of missed it a little bit, which doesn't bother me. It bothers me, but not as much as it used to. So, but if it gives me another opportunity to get in and I get into it, then I will scale out. If it hits 2021, even probably 21, I would take part of my position off the table. Bank some profit, reduce your risk, you reduce your exposure. It's just a wise move from a probability perspective. And last but not least, we'll look at Starbucks real quick. This is one that was a head and shoulders that broke right there on the earnings news, but then it rallied back up. I still like the looks of it if it breaks that 111 area. And what we've got here is the beginnings of a falling three methods, which is not textbook, not ideal. It's not, after a downward move, you get one big down pattern, and then the textbook pattern is 3 small days inside the body of the first day, which we've got. We actually have 4 days. And then a big down day to follow. Another one of these days right here would give us a falling three methods, which is a bearish continuation pattern, and the trend over the last few months has been down. The move in the last week has been down. So that would give us an indication that it's probably going to go lower. So if we get a falling through methods and then it breaks this 111 area, then I would like it. But that's a lot of different contingents. So this thing's got to play out perfectly. Otherwise, I'm on the sidelines. So that was a long review, but hopefully some good stuff. If you haven't subscribed to Patterns in a Flash yet, go check it out. There you can get a link. Should be in the description down below where you can get the trial. Go in, test drive it, kick the tires for 2 weeks, come out to one of my classes. You'll get a couple patterns of the week. You should be able to squeeze at least one of my live classes in. You can ask questions, kick the tires, check out the flashcards, check out the videos. There's over 8 hours of video in there. There's a risk-reward calculator. There's all kinds of good stuff. So there's also a way to get directly to me at the bottom of the main page. You can send me a message. And that email will come directly to me, and I can respond to you as quickly as possible. So y'all have a great day, great rest of the week. We're coming up into the holidays. But as you hear me say, I'm signing off. This is the Pattern Whisperer signing off, saying if you're going to fail at just one thing, fail at quitting. God bless. Bye-bye.
Folks, thanks for watching. I hope you enjoyed the training. Now, if you did, be sure to give us a thumbs up and go ahead and hit the subscribe button right over here and hit the bell to keep up with all the latest trading content. And oh, did you know that we have a podcast? Supercharge your trading education with the Stock Market Millionaire, which you can find in the description down below. And while you're there, you can also find other amazing free trading resources that I've put together just for you.